What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips, but more importantly, where you can find a proven and repeatable strategy to make money every day. This channel happens to focus on the triple leverage bullish semiconductor ETF SOXL, but this trading and charting method can be used with any publicly traded company. Let's get into today's agenda, where we'll recap today's intraday price action. We'll zoom out a little bit to look at the week, month, quarter, and year, and then we'll zoom back in to set our 4-hour markers and our triggers and targets for tomorrow, and we'll review the triggers and targets for the week, the month, the quarter, and the year. Looking at the chart, we'll go ahead and flip to the 5-minute, and we'll look at the intraday action from today. We got an immediate, work with me here, thinkorswim, there we go. We got an immediate push up, but if we're just looking at pure candle structure, bringing in yesterday's price action, we did get a higher low and then a higher high. So once this closed at 3, that pretty much triggers the rule, right? Our rule is we're looking for higher lows above opening print to enter calls, and we're looking for lower highs below opening print to get into puts. So that can be your higher low, higher high here. If you didn't enter right at the beginning of the day, or find something on the 1 minute to enter a little bit lower. If you did, you were below opening print, so it would technically be violating the rules. But if you want to take on added risk, you just need to make sure that you're not buying in quite as many contracts, or setting yourself a tighter stop loss. But if you waited for the 5-minute and you entered there, of course the previous high day would be the first target, but there's no real magnitude there. And then if you waited for the candle to close, you were above previous high day anyway. But if you wanted to load up on contracts, buy at the money or in the money and take it to overnight high, then you could have scalped that right there as well. You could have got rid of most of your position, left a couple runners, tried to see if we would could move any higher, but we were running into this 200 fib extension of the September 17th gap and go, as well as this daily broadening formation that we've got here. So we can see price action stalled out, moved sideways, and then as the Powell interview came on, we got the quick drop lower, right? So no real lower high underneath the opening print on this drop down, unless maybe on the 1 minute. Then you could scalp the lower high. Let's go ahead and bring up the 1 minute and see what it's looking like. We didn't get down to the 1 minute today, but if someone did, right? So here's your I think someone always wants to jump around on me. There we go. So there is your lower high on the 1 minute. So you could have entered as soon as price broke below this lower high here. So what's that, 34.44? First target would be overnight low, 34.23. So again, if you loaded up on contracts, buying in the money, you could have got yourself a little bit of profit here. But then of course your ultimate target was going to be the previous low a day. Now if you remember back to our notes from yesterday's video, we had this 33.91 and 33.64 level as possible bounce points, even if we did get the push down. So the levels that we had played out perfectly. These are just fib extensions of that September 17th gap and go, and you can see they bounced basically off them pretty perfectly. So if you did take advantage of this lower high on the 1 minute and take it down to this 33.64, until you got this higher high here, and then maybe your higher low, exiting at the breach of this higher low, so that would be 34.08. That's taking 34.44 to 34.08, about a 40-cent move. That's not too bad in terms of SOXL. You can see here with about a 12-cent move, that was a third of a percent on the underlying ETF. So again, if you loaded up on contracts, buying in the money at the money, you could have got yourself a nice little piece of change. But then after that, we just flattened out, making higher lows, lower highs, just really moving sideways, and not really giving much into the end of the day. Now, if we look at things from a day perspective, we did get the 2 up, but it's a red 2, right? So where do we want to go with this? So, oops. Make this a little bigger for everyone. There we go. So we can see that we did have a 2 up, but it was a red 2. So price action closed below open, and that was also within yesterday's price action, sitting basically right on last week's high, this 34.14. and not too far above the week flip. So if we do get a 2 up, 2 down tomorrow, that magnitude of that move would be the week flip, that 32.20. If we go below that 32.20, we're obviously flipping the week red, and we're looking at a combo 2 up, 2 down, targeting the low of this 2 down right here, which is the top of the gap of 34.23. Now, once we're back down there, we're bringing the gap back into play, right? So we've talked about many times how tops or bottoms of gaps, depending on which way direction you're attacking them, can be bounce points or rejection points. So we do have to watch for that bounce again off of that level. But if we do start to peak in there again, we want to look for that half gap first. Once we reach that, which should basically just above this last week's 50% line, then we're looking for the full gap fill. And if that happens, we're looking possibly at even looking at the market maker's expected move low and retesting this breakout point that I said we only retested on an intraday level, right? So this could be a healthy pullback, right? Even if we saw that, that would give you plenty of magnitude to sell calls or buy puts, taking it back down to the top of this breakout point. And then if we turn what was resistance into support, that's a bullish signal, right? So from a higher time frame perspective, we would take a bounce off of that level. Now, if we go back up and we start making lower highs, that's a different story. But until that would happen, a bounce off of this breakout point, in our eyes, would be a bullish signal, right? So even if we do get downward action tomorrow, downside action tomorrow, it's not the worst thing in the world. If we get upside action tomorrow, it's just a continuation of this uptrend. Now we've got to look out for that market maker's expected move high. Again, it's not an end-all be-all. That doesn't mean price action stops there, but we do have to keep that level in mind. It's not there for no reason, right? There's a high probability that price is going to stay within this market maker's expected move high and the market maker's expected move low. So we just want to keep those in mind. From a week perspective, I think we all know where we stand. We've gone 2 up on the week, and let's get a good chart up here. So we've gone 2 up on the week. We have, gone past this week. Come on, Thinkorswim. Why are you doing that to me? We got past this weekly broadening formation, right? It looks like we've got it past it pretty handily. But if we do pull back tomorrow and into the end of the week, we run the chance of turning this green inverted hammer, which is not necessarily a bullish signal, right? Most people look at bearish, right? Most people look at an inverted hammer as a bearish signal, but if it's green, right, if we've closed above where we opened, and especially if we close above last week's high, that can't be that bearish of a signal, right? It doesn't necessarily mean we're going to shoot higher, but I think there would be a higher probability of sideways or muted downside action if we do get downside action. So we want to watch how the rest of this week plays out. If we do continue to pull back and even flip this week red, then we start threatening the gaps that we've left here from the September 17th gap up. Now to the upside, we've been talking about it for a while, that 36.15. We want to break this higher high on the week perspective. If we do that, we're working towards filling this gap as well. But again, we don't want to get too far ahead of ourselves. First thing we want to do is take out this higher high. We want to look for any corrective activity at that 36.15 level. Corrective activity could be a pullback. It could be sideways action. Hey, we might just blow through it, but that's the first level that we're shooting for, and we'll see that as we get into our notes here. From the month perspective, we're still looking great. Let's go. Oops, that's not what I want. I want the month. There we go. And we'll bring out. Excuse me. So we can see from the month perspective, we've got the bullish engulfing candle from last month, and the very solid 2 up from this month, right? So again, this 36.15 is the high of this 3. So one of the reversals main reversals in the strat methodology is a 3, 2 down, 2 up. This is just it's a little more convoluted, but it's a 3 combo 2 down, combo 2 up, right? So we're above the trigger of the 3, 2 down, 2 up, which was 32.64. So we're targeting this 36.15 from the month perspective as well. So we can see how that 36.15 is really coming into play. Comes even into play even more when we look at the quarter, right? So we have the 2 down, 2 up that we're in, right? It triggered at the high of last quarter, and we're targeting the high of the quarter to the left of the 2 down, right? So 36.15 is that high. So once again, 36.15 comes into play. Another reason why it's very important is because if we breach 36.15, if we go above 36.15, that triggers the 1 combo 2 down, 2 up. Now, when that triggers, right, breaks 36.15, the magnitude is not the high of the 1. It's actually the high of the candle to the left of the 1. So with the 1 combo 2 down, 2 up, we will be targeting 70.08. Again, if you're familiar with this channel, we've talked about this before. That doesn't mean that that's going to happen this quarter. It doesn't even mean it's going to happen next quarter. Could it take second quarter of 2026, maybe even third quarter? Possibly, right? Like they say, it's stairs up, escalator down, or elevator down. So it could just be a slow chug back up to that 70.08 level. We might not even make it up to that level, right? We don't want to get too far ahead of our skis here. We just know that it will have triggered, and that is, as long as it's in force, as long as price is above 36.15, then we can be confident, or we can be more confident to stay in the longs that we may have for, the 2027 expiration. The 2028 expiration contracts were released last week. So if we've got those more long-term contracts, you can feel a little bit more comfortable in sitting in those and trying to, reach last year's 50% line, fill this gap here, test this monthly broadening formation again. We'll see what happens, right? So it may take a little while. But from the quarter perspective, it's looking really bullish. The year, we've really turned around as well. We've talked about this over and over on this channel. We had the 1, 2 up, 2 down. The magnitude of that move is the low of the candle to the left of the 1. So the 2022 candle, the low of that candle, it was the magnitude, which is at 621. And this April 7th, we hit that 723. So we didn't quite reach magnitude, but it got very close. And at this point, we have pushed all the way back up and turned this into a green hammer, right? So if we can finish the year like this, that sets us up real good for a 2 down, 2 up next year from the year perspective, which would trigger at the high of whatever this year is, and the magnitude would be the high of 2024, which is at 70.08 again. The other thing that does is, if we go 2 up next year, that locks this in as a higher low, right? This low was 621, this low is 723. That gives us a higher low, and although it's been huge volatility on the year perspective, that continues the uptrend, right? So we just want to continue to see, or not necessarily the uptrend, but at least bullish consolidation. Bullish consolidation, because technically 2024 was a lower high, right? If you look at this, the all-time high of 74.21 last year was, if you want to be real technical, it could have been considered a lower high. So at the very least, it's bullish consolidation, lower highs, higher lows. It's just consolidation. But we are staying green. We're in full time frame continuity. But at if you want to look at it in the most bullish perspective, it is a higher low, right? So that's what we've got from a zoomed out perspective. Let's zoom back into the 5-minute and our scalp chart for tomorrow, and let's just take a look at what the plan will be if we want to do any scalping or intraday trading tomorrow from open. We can see that we've got, so far, the overnight high is 34.91, previous high day is 35.30, the previous lower day is 33.67, and the overnight low is 34.20, right? So those are our major 4-hour markers. Honorable mention is the 4-hour trigger to the upside and the 4-hour trigger to the downside, which is also the previous lower day. So those are points of inflection as well. If you see price action push, if we open up high tomorrow and we push down, look for a bounce here at the 4-hour trigger to the upside. It's just a point of inflection. It doesn't mean we have to bounce there, but it's a level that you want to keep in mind. So let's say we do open up tomorrow just slightly higher. Let me pull out the right tool here. We'll use this as the opening print, right? This peach level, this price level 1. Say we open at 34.77. If we do get a push down, and say we get a bounce off the 4-hour trigger to the upside, if we get that push back up, but then we get a lower high underneath the opening print, then we want to be looking to enter puts, and our first target is going to be this overnight low and previous low a day, right? If we do get, if we open here and we get price action that pushes up, say, to this overnight high, pushes back down, and we get a higher low above opening print, then we're going to want to enter calls. First target will be overnight high, which doesn't give us a lot of magnitude, so it's kind of off the board. Second target is previous high a day, right? So that's the simplest, easiest, repeatable pattern that you can use for not only SOXL but any ticker that's traded on the U.S. stock market, right? The, oh, higher lows above opening print. You're looking at calls targeting overnight high and previous high day. Who knows, the price action overnight might move this overnight high up here. So if we get price action that opens, we get the higher low, then the first target is previous high day and the second target is overnight high. That gives you a little bit more magnitude to work with. But if we get price action to the downside, we're looking for lower highs below opening print, and we're looking to target overnight low and previous low a day. All right, so I think everybody knows that. The scalping and intraday trading perspective. Let's go ahead and look at the more day trade and swing trade perspective. We'll pull up the 4-hour chart first, and we can see again we're resting right above last week's high. We're sitting in a oops, come on, let's make this a little wider, a little bigger so everybody can see it here. Come on, I don't know why my computer's moving slow. Let's go. All right, so we've got the today we had the first 4 hour was a failed 2 up or an inverted hammer, and then we had a 2 down, which was almost a failed 2 down. It would be more of a failed 2 down if this was green, but it did, hammer back up. It still closed below where the first 4 or the second 4-hour candle opened, but it did give us a little bit of a hammer, a little bit of bulls. It gives the bulls a little bit of hope that you could get that 2 down 2 up. But if we do get that 2 down 2 up, that's if price action goes above the high of the second 4-hour candle of today. That's 34.53. Then we're targeting the high of the first 4-hour candle of today, which is that 35.30. Past that, we've got our 36.03, which is the market maker's expected move. But in between there, before and after, we've got some fib extensions. So we'll look at those when we get into the notes. If we get price action to the downside, right? If price action tomorrow goes below the low of today or below the low of the second 4-hour candle of today, we're first targeting the low of this 2, which is the weak flip as well, a very reasonable bounce point. If we do push through below that, then we're targeting the top of this gap. And again, we've talked about how gaps can be bounce points, but if we do get the price action that continues through the gap, we want to look for the gap close. If it's going to be an extremely red day, we can target that market maker's expected move low and last month's high. I don't know if we make it down there tomorrow. Again, we're in a pretty strong uptrend. It would be a big deal just to make a lower low on the 4-hour. I would say, to create more of a broadening formation, because we're coming from a higher high. So if we do get a lower low and fill this gap, we're creating more of a broadening formation at the top of this move. But again, it wouldn't be unexpected to retest this market maker's expected move low and last month's high, because that is the origin of this breakout point. So we want to turn what was resistance in the past into support right now, right? We want to look at the day chart. Let's look at the day chart here, right? So if we get price action to the downside, that's going to be a 2 up, 2 down, triggering at the low of today, targeting the low of Monday. If we do hit that, again, it's the same type of story as the 4-hour. We're flipping the weak red, and we're looking to target that at least the top of the gap and then fill that gap. From the upside, again, we've got the market maker's expected move high. And if we just flip over to, let's go to our scalp chart real quick. We do have some fib extensions that we can work with, right? The September gap and go, we've breached the 200, so now we're bringing on the 238, the 250, and the 261.8, which also lines up with the 238 of that most recent range, high to low in that 11-week range. So we do have some levels above that we can work with, right? So just going over to our notes, so we have something visual other than the chart, right? We've got our notes for September 24th. There'll be 66 trading days left in the year tomorrow. Today's close price was 34.30, and then we have in our notes, we know what will flip the week red, the month red, the quarter red, and the year red. We also have noted our market maker's expected move, which relieves us with the range of 36.03 to 30.01, and then we know what our gaps above are and our gaps below are. We've talked about the 4-hour triggers and targets. Well, we looked at the intraday scalping triggers and targets, and we also talked about the 4-hour triggers and targets. So to the downside, it's that combo 2 up, combo 2 down, triggering at 33.67 with a magnitude of 33.19 and an extended target of 32.76. To the upside, it's that 2 down, 2 up reversal, triggering at 34.53 with a magnitude of 35.30 and an extended target of 35.95. From the day perspective, we looked at that as well. If it goes to the downside, it's a 2 up, 2 down, triggering at 33.67 with the magnitude of 33.19, extended targets of 32.76, 32.39, and 32.12. To the upside, we would have a 2 up, 2 up continuation. So no magnitude when you have a continuation. There's only magnitudes when you have a reversal, which the magnitudes are your clear exit points. So we don't have as clear exit points, but we do have targets. We have a clear entry at 35.30 with the target of 35.50, 35.95, and 36.22, which are some of those extended Fibonacci's that we have out there. We looked at everything from a week perspective, so we know what that looks like. Again, in order to make a red 3 or a bearish engulfing candle, we've got to go all the way down to 28.92. I don't think that's going to happen this week, but again, we don't make predictions. We'll just be ready for it if it comes. If it comes, then we know what our extended targets are. Currently, though, and we can see because it's underlined and in bold, underlined means it's triggered, bold means it's in force. We have a 2 up, 2 up, triggered at 34.14. We've already reached the target of 35.07. We're just looking for that 35.95, 36.15. Remember that number, right? Should be ringing bells because it's targets on the week, the month, and the quarter perspective. And then we've got the further extended target of 38.45. We looked at the quarter as well. We've gone 3, 2 up, and we're in force. This would be a red 3 if we go down, right? So to create a bearish engulfing, we have to get all the way down to this 22.57. I don't think that's going to happen before the end of the month. If it does, we've got more to talk about at that point. But we did trigger the 3, 2 up, and it is in force. We're above 29.66. We've already reached 2 of our targets. We're very close to the next one, 35.95. Then again is that 36.15, which remember from the week perspective, and then we've got a 41.19 extended target on there as well. The quarter, remember, we're really excited about the quarter because it triggered the 2 down, 2 up, and it's in force. That's why it's bold. Triggered at 25.84. We're almost to the magnitude of 36.15, and if we do flip that 36, push that 36.15, we go above that level. That triggers the 1 combo 2 down, 2 up from the quarter perspective. That gives us that ultimate target of 70.08. But we've got some targets on the way up of 38.89, 42.04, and 44.54 just to start things out. We'll have a couple other targets because that's 70.08 is a long ways to go. Again, we talked about the year. We pulled a 1, 2 up, 2 down, but we've totally reversed that. We did not quite reach magnitude, so that leaves us with a higher low. So, but we're very far from making a bullish engulfing candle, right? We would have to get up to that 70.08. If we did, then we'd be looking for 74.21, which is that all-time high, and then we could get into broadening formations and fib extensions to look for new highs into all-time blue sky territory. So those are your triggers and targets. I hope I've gone through everything thoroughly today, but quick enough. I hope I didn't drag on too long. If you enjoyed the video, please give it a thumbs up. It helps the channel grow. We're trying to spread the word about SOXL. By no means is it a new ETF. It's been out there for years, but there's still a lot of people that have never even heard of it. On top of that, we want to spread the word about the strat. Again, it's just the most simple way of looking at price action. You don't need a whole bunch of indicators on your chart to understand what's going on. And then also our nuanced layers that we layer on top of that, with the 4-hour markers for our scalps and day trades and just how we approach the market as a whole. So again, the thumbs up goes a long way. We're not selling anything on this channel. We're trying to give out as much free information as possible, as quickly as possible, for both or for everyone's enjoyment and hopefully helping out in everyone's trading. So if you enjoyed the show, give it a thumbs up. If you're not already subscribed, make sure you subscribe. We talk about a lot of these concepts kind of quickly in the weekly videos. So if you're not familiar with them, make sure you're watching every night to kind of catch on and get a better idea. And then especially watch the weekend videos where we go a little bit more in depth. So again, I hope everybody enjoyed it. Make sure you get some good rest tonight. That way you wake up refreshed tomorrow. And I look forward to trading with you.